Blog Talk Radio.
Here we go. Blast off.
This is True Capitalist Radio. True Capitalist Radio.
I am your host, the man they call Ghost.
The badass of business.
Give him capitalism or give him death. That's it. Period.
Broadcasting from his Skyline office studios in beautiful downtown Austin, Texas.
You sound fruitier than a box of Fruit Loops, for Christ's sake.
And now, he'll take it from here. Your host, the prognosticator of prognosticators, the man they call Ghost.
It's Monday. I know I hate Mondays just as much as I hate Sunday, but I think I hate Sunday a little bit more. Anyway, I hope you had a great weekend, folks. As you folks know, every weekend, that's why I celebrate Baller Friday. I try to live every weekend as lavish as I possibly can, and that's just how it goes, you know what I'm saying? Anyway, I want to thank everybody for tuning in with me. This is episode number 125 for all the folks that are keeping track of the True Capitalist broadcast. And, of course, before we get into anything, I'd like for everybody to please retweet the broadcast. All right, go to the social networks, go to the forums, go to the blogs, and spread it around like wildfire. And let everybody know that we're in effect and in the house. Once again, folks, I want to thank everybody for tuning in with me. It's Monday. The equity markets, folks, the equities markets are shaken before the actual kickoff to earnings season, folks, and I think this is a little premature today, but once again, we've been dealing with a helter-skelter market ever since the beginning of the year, ever since the downward ending of QE2 for all the economics buffs out there of American economy. But let's just go ahead and get through the market. Once again, folks, 646-652-4869 is the number to call if you have something to say here on the broadcast. You know, I mean, of course, I don't want to hear any of these mumble-mouthed, sentence fragment-written prank calls that, you know, don't provide any, no insight, no type of commentary, or any lulls for that matter. But anyway, folks, once again, when I see days like these, and we saw a definite retraction in the equities markets if you were in it today, once again, I look for bottom-feeding opportunities, all right? I mean, all this investor sentiment right now of selling off, trying to liquidate assets, has to do with the European debt crisis. Once again, I hate to keep saying this every time we see a retraction of the market, but that's why you have investors liquidating their assets out here. All right? I mean, they're liquidating their assets because you guess what I've always been saying, that now that they've taken care of Greece with their bailout package and austerity measures, now the rest of Europe is falling. And why? Because of socialism. That's right, that's socialism, for Christ's sake. And if you look back in the archives, I've been saying this was going to happen. I've been saying it and saying it. You can look back in the archives. blogtalkradio.com/ghost is where every broadcast is stored and archived for history because we are the radio of record. So you can look back in the archives. I have said that what was going to happen right after Greece, we were going to have Italy. We were going to have Spain. We were going to have Portugal. Ireland. All these socialist countries are imploding from their own stagnation and mediocrity that encompasses the political philosophy and economic ideology of socialism. And that's exactly what is weighing down the market at this point in time, because it seems that they may have to come out the pocket with a little bit more bailouts for all these other socialist countries that can no longer sustain their ridiculous selves. Yeah, they can't be the Europeans like, oh, yes, I'm European. I can go get a job. I only work 5 hours a day with 3-hour lunches. Yes. Oh, yeah, I live over here in the chalet. Yeah. I mean, give me a break, all right? It's time to go out there and go to work like American people used to, all right? Now American people have adopted much like the European-style socialist model. That's why they're out there at all these social services waiting for their handout, supplied by taxpayers like myself and other productive members of society out here in America, for Christ's sake, and we've just about had it. Anyway, let me go ahead and get through the markets. Then I want to take your calls. We saw a retraction, folks, and once again, I think it's a bottom-feeding opportunity. I think that these earnings are going to be up. I think Alcoa, which is going to be, have they already, I don't even know if they've released their earnings yet. But I think that this is going to put an upswing. All the earnings in the after-hour sessions are going to kick off. We're going to see some positive numbers. It's going to be a bumpy road once again because of the helter-skelter market that we have here. But I think it's going to be an opportunity for those that are getting in on some of these volatile waves, no matter whether it's large blue chip stock, whether it's mid cap or small cap. There are plays to be made and a lot of Benjamins out there to be grabbed, and it's up to you to do it. But let's get through the market. There's a retraction today. I mean, Dow Jones Industrials was down 151.44 points, a percentage decrease of 1.20%, closing out today at 12,505.80 points, for Christ's sake. Jesus Christ. I mean, I know it's a retraction, but let me tell you, I'm putting my money in the right places based upon my forecasts, and I've given you a pretty much a level head of what I think about when strategizing for plays out here. You know, I take a look at the landscape, base it on class strata, because you have to. I know that folks want to say that it's not about class, it's not about this. Let's be honest. This past, like I said, from February on to May, we saw a retraction in mainstream retailers like Walmart, Target, so on and so forth, and we saw an increase in high-end luxury retailers like Tiffany's and Williams & Sonoma, Lulu Athletica, Macy's. I mean, these people had 20, 30% increases on their expected earnings, for Christ's sake, during a time when we were supposed to be on shaky ground. We all remember this past spring, this past latter part of winter, for Christ's sake. I mean, we saw, gas prices go up the wazoo and have sustained at these levels since that time. We saw an increase in commodities, which a commodity spike hit everybody in the pocket when it came to groceries. And, of course, these people stopped spending. That's why you saw not meeting up to the street's expectations in companies like Walmart and Target. Well, now they are. Now they're spending, folks. All right? I'm telling you, they're spending. Why don't you go out and look for yourself? Go to a mall. Take a look at people's threads. Are they new? Are they used? Are they going out with... I mean, these are the things that you have to think about when you're out here in regular society. Take a look at what they're buying, the shoes, the clothing. Take a look at the bags they're carrying. Take a look at the trends that are being set. I mean, these are the things that you capitalize on when basing short-term or long-term plays, for Christ's sake. And that's why I'm saying, I think that, you know... These people, and I'm still going to stay to it, I think that we're 13,500 Dow Jones Industrial by the end of the year, unless these idiots in Washington can't come up with an agreement to increase the debt ceiling, and if Europe doesn't collapse, for Christ's sake. Because Europe collapsing will send a shock wave out here to our markets, even though we shouldn't really care. It's not like they're producing anything. The problem is that we got a lot of financial institutions in America that have a lot of vested interest in these socialist countries. Now, what does that mean exactly? Well, these banks, you know, the places that you put your money in hopes of saving it up and gaining an interest rate, so on and so forth. Well, these banks have actually accumulated assets in the bond market. And for you folks that don't know what bonds are, it's what governments issue to investors so that they can print the amount of money, that is issued per bond. That's why every time they have a printing of the presses when it comes to the money, they have a bond sale. You understand? So you go buy a government bond. I mean, somebody buys these government bonds, and when they buy them, that means more printing of the money is printed because somebody has basically purchased the bonds, and it's their money that's being reprinted. I mean, in essence. But you see, if Europe collapses, a lot of our financial institutions have purchased these bonds in Greece, in Italy, in Spain, in Portugal. And it could really throw a shock wave if they lose their assets. I mean, Whoever thought that you could lose money in a government bond? It's happening. And if they lose their investments out there, that means who the hell knows if your savings account is even going to be available for you at the time, because they just lost a considerable amount of investment, for Christ's sake. So that's why I'm saying you need to understand how the market works. People just say, oh, they're just printing money. They're just printing money, for Christ's sake. If that was the case, we would be like Zimbabwe. You should look at the Zimbabwe prices for products. I mean, you know, it's like 30,000 Zimbabwe dollars for a roll of toilet paper out there, because these idiots have printed out so much money that it has remained it's worthless now. All right, anyway, let me go ahead and get through the market. You people don't care about this millions of dollars of economic knowledge here. You people are just like, oh, I'm just going to tickle my asshole and see how many dingleberries I got tangled in my ass hair. Give me a break. Let's go down to the S&P 500. It is down today 24.31 points, a percentage decrease of 1.81%, closing out today at 1,319.49 points. The NASDAQ took the biggest header, for Christ's sake. I mean, good God. NASDAQ is down 57.19 points, a percentage decrease of 2% flat, I should say. Down 2% flat, closing out today at 2,802.62 points on the day. And for all the folks that are out there in the FTSE, to my European brethren that are out there that are investors, that are capitalists, the FTSE didn't look much better either. The FTSE was down 1% based upon all these European debt fears. It was down 1%, 61.42 points on the negative, closing out 5,929.16 for the FTSE. Anyway, let's get to the commodity, shall we? That's going to gauge whether or not we're going to see an increase in gas prices, grocery store products, so on and so forth. You would think that since we are seeing such fears, in the markets in Europe, and the investors in the investment community are liquidating their assets, you would think that there possibly isn't going to be a spike in oil, given the fact that people aren't going to have enough money to survive out here because they're imploding from their own socialism. So I would expect a decrease in energy, and that's exactly what we saw. Brent crude is down $1.05, closing out today at $117.28 per barrel of Brent crude oil, and Brent crude is consumed by Europe and Asia. Gasoline saw a modest, very, very modest increase of $1.25. We got heating oil decreasing 89 cents. That's a percentage decrease of 0.29%. Natural gas saw an increase today. We saw some dramatic drops in it for the past couple of weeks, but we're seeing an increase today, 8 cents on the upside. What was that? Percentage increase of 2.07%. WTI sweet crude, folks, we're starting to see this come down once again. It is down $1.02, a percentage decrease of 1.06%, closing out today at $95.18 per barrel of WTI sweet crude. All right, we're seeing a lot of decreases here. Let's see. Agriculture, we got canola futures. They are down $2.40. We got cocoa futures down $41, a percentage decrease of 1.33%. We've got coffee futures down $4.25. Good God, for coffee. That's a percentage decrease of 1.61% on the day. Decrease. Corn is down. It should be down more, but it's not down enough. A decrease of $4.25. But everybody see cotton? I mean, did anybody see cotton? If you were trading cotton today, God damn it, you got your shirt probably handed to you, and then some, for Christ's sake. It was just horrible. Horrible. I mean, but, you know, before I say the price, I hope this decrease, once again, motivates those that are wearing these fruity-ass male attire. You know, these Abercrombie Fitch, this disgusting, ridiculous, nonsense Ed Hardy shirt, throw a couple of Chinese writing letters on it and a carp, and we're going to call it a shirt. And hopefully you people get inspired to throw something with a little bit more fashion sense, something with a little bit more originality, for Christ's sake. You know what I mean? Jesus Christ. Cotton is down, though. It is down $4.25. Or excuse me, it's down $5. Sorry, $5 it's down. That's a percentage decrease of 4.39%. Good God.